let's be honest, trying to navigate the housing market right now, it can feel, well, impossible. You've got high prices, you've got rising interest rates. It's a whole lot to deal with. And that whole situation has pushed more people than ever into renting single-family homes. That big shift has created some absolutely massive players in the real estate world. So is this the new reality? Is renting the new path to getting that single-family home experience? It's a question on a lot of our minds. For so many people, the dream of having a yard, a quiet neighborhood, that's now being achieved through a lease, not a mortgage. And that brings us right to the company at the very center of this huge trend. Meet Invitation Homes. They are, by far, the largest single-family home landlord in the entire country. So we're going to do a deep dive into their 2025 year-end report card to see what their performance can tell us, not just about them, but about the entire housing market. Okay, so how does a company this big even see its own role in this changing world? They frame it in a really interesting way. They see themselves as providing a new path to that classic American dream. Their CEO, Dallas Tanner, puts it like this. They offer a lower-cost, flexible alternative to home ownership. The whole idea is that they're providing a solution for people, including essential folks like teachers and nurses, who are just completely priced out of buying a house. It's a really powerful mission statement, for sure. But the big question is, do the numbers actually back it up? All right, let's get into the numbers. To really understand their 2025 financial story, there's one key term, a bit of industry jargon that we've got to break down first. It's called Core FFO, which stands for Funds from Operations. Now, I know it sounds super technical, but don't let the name scare you. The simplest way to think about it is just a landlord's true cash profit. It's the money they actually have left after paying all the bills to keep the houses up and running. In their world, this is the metric for profitability. So for 2025, their core FFO came in at $1.91 per share. Now that's a 1.7% increase from the year before. It's not, explosive growth, but it does signal that their core business is steady and stable. Now, if we zoom out a bit, their total revenue for the year was a staggering $2.7 billion. That's up 4.2%. All that really tells us is that more money is coming in the door from rent and other fees. On the surface, that looks pretty good, right?
But here, this is where the real story is. This is where you see the tension in their business. While their revenue grew by a solid 4.2%, their operating costs, we're talking repairs, taxes, insurance, all that stuff, grew even faster at 5.4%. And look, anytime your costs are growing faster than your income, it puts a real squeeze on your profits. And that profit squeeze is the key to understanding the big strategic shift that we're about to see.
So that's the big picture of financial health. But what does all this look like on the ground? Let's go inside their housing portfolio and see what's actually happening at the property level. First things first, their homes are almost always full. I mean, they had an average occupancy of 96.8%. That is a rate most landlords can only dream of. But what's interesting is that's actually a tiny dip from the year before. It's a small change, sure, but it could be the very first sign of a cooling rental market. But having people in the houses is only half the picture. The real story, the most telling detail in this entire report, is hidden when you look at what they charge people who are already tenants versus what they can get from new ones. And this reveals a market with a total split personality. For existing tenants who are just renewing their lease, Invitation Homes jacked up the rent by 4.6%. And this is a huge but. For new tenants just moving in, they actually had to cut the rent by 0.6%. So what does that tell you? It shows they've got pricing power over people who really want to avoid the massive hassle of moving. But out on the open market for new renters, it is getting much, much more competitive. Okay, so you're facing rising costs and a tougher market for new leases. What's your big move for growth? Well, it turns out it's not just about buying existing houses anymore. It's about building them from scratch. In 2025, their strategy became crystal clear: trade up. They spent over $800 million buying homes, and nearly all of them were brand new construction. At the same time, they sold off more than $500 million worth of their older houses. This directly attacks that cost problem we just saw because, newer homes mean fewer surprise repairs and lower maintenance bills. Then, right as 2026 kicked off, they made a massive move. They didn't just partner with a home builder. They went out and bought one. This acquisition of a company called ResiBuilt signals a huge, fundamental change in how they do business.
Buying ResiBuilt basically gives Invitation Homes its very own in-house construction company. It gives them total control over a pipeline of about 1,500 lots all ready for building, mostly in the fast-growing Southeast. This whole build-to-rent strategy means they can control their own supply of new, low-maintenance homes instead of having to fight to buy them on the open market.
So you've got rising costs, a tricky rental market, and a brand new home building division. What in the world does this all mean for the year ahead? Let's take a look at what the company itself is forecasting for 2026. When you look at their guidance for the future, two numbers just leap off the page. First, they expect profit growth from their existing homes to slow down by about half, dropping from 2.3% to just over 1.15%. Second, and this is a big one, they plan to slash their home buying from over $800 million all the way down to just $250 million. They are slamming on the brakes when it comes to buying. So, when the biggest single-family landlord in the entire country signals a major slowdown like this, it's a real bellwether for the whole housing market. Their strategy of building new homes and selling off their old ones, combined with their forecast for slower growth, it tells a story of a market that's really in transition. And this really brings us to the final and most critical question. The line between being a landlord and being a developer is getting really, really blurry. As these corporate giants shift from just buying houses to actually building entire communities specifically for renters, it forces us to ask, how is this going to shape the future of housing, of homeownership, and of the American dream for every single one of us?